You're listening to The Brief, a podcast from the Business Council of Alberta. I'm your host, Scott Crockatt, and in each episode, we dive into the stories of innovation, economics, and the people working to make life better for all Albertans. Let's get into it. Well, we're back again talking about the Alberta economy, and as you listeners to this show who are regularly tuning in know, twice each year, the economics team at the Business Council of Alberta produces a Alberta Snapshot, a look at the Alberta economy that dives into the good, the bad, and the urgent, as we say. And we're back today with Alicia Planincic and Mike Holden, economists at the Business Council of Alberta, and the two authors of this report. Nice to see both of you.
You too.
Great to be here.
Great. So looking at the snapshot, Mike and Lish, I couldn't help but think of one of my favorite books, A Tale of Two Cities. And there's so many of the stories within this snapshot that seem to kind of indicate that. I mean, I know it's not necessarily the spring of hope and the winter of despair, but there are signals that seem to point in opposite directions. You know, strong economic forecasts, but underlying weakness, high unemployment rate, but few layoffs. So as far as forecasts go, it seems like this one was a little bit harder than usual to maybe put together and make sense of. Tell me, what's really going on in the Alberta economy today?
Well, you're not wrong that there's the sense there's a lot going on, some positive signs in Alberta and some negative ones as well. And it's, I think for us, as we were talking about this before this podcast, it's uncertainty is the word of the day. In fact, as we were prepping for this, Lish had sent me a helpful list of synonyms for uncertainty, because that's really what's happening here. We're in a position where the Alberta economy is slowing down, the Canadian economy is slowing down, and it's not just a tariff story. There's just so much going on and so much changing so quickly that it's really hard to get a hold of or to get a good sense of what the impact of things are, because it changes before we can see the impact of the previous change. And so, we'll probably talk about this a little bit later, but we're at a point where the Bank of Canada and other international forecasting agencies don't even produce economic outlooks or projections anymore. They build scenarios based on what might happen in the world with Trump's tariffs and whatever else. So it's this profound uncertainty that nobody really knows what's happening or what's going to happen.
Okay, so within that uncertainty, though, we got to sift through the noise to get some signal. I want to talk about the top line bit. In this economic report, you point to your own forecasts and those of others that have generally had Alberta at or near the top of economic growth within Canada, yet you say the economy is on shaky footing. How can both those things be true?
Really, this is kind of a top line. What's driving the top line growth that we're seeing is largely population growth. And this is something that we've talked about on the show for the last couple of years because it's been relevant for the last couple of years. And so I think it's even caused a little bit of confusion, probably for folks around the country, but even individual Albertans, to see headlines about the strength of the Alberta economy, leading in growth again. It has been a lot of these bank forecasts and headlines, but to feel like I'm not really getting ahead, I'm not really any better off than I was a couple of years ago. And in fact, that story is true when we look at the data, when we look at kind of individual indicators of prosperity. So things like wages and income and employment, those things look not so good. But we do have a whole lot more folks here. And that's why we're seeing kind of those top line numbers are showing a bit more strength than we would expect otherwise. So
let's take it down from the top line numbers and jump into things that influence every average Albertan, people that are listening to this podcast. And as we often say, most people's first economic concern is their own job. So let's talk about the job market. What are we seeing in the Alberta labor market these days?
Well, as Lish said, we're seeing slowing growth in the labor market. Unemployment rate is creeping up. The Alberta economy has really added no new jobs since November or December of this year. And so what typically ends up happening is, in a period where you're expecting an economic slowdown or in the early days of an economic slowdown and worried about a recession, companies don't like laying people off. And so that's kind of a last resort for what they do. And so we're seeing, but what we're seeing instead is a lot of hiring intentions are disappearing. So there aren't a lot of new jobs being created. And so we've got this split in the labor market where people who are sort of in their prime working years and are established in their jobs, they're so far at least, generally speaking, doing just fine. Mm-hmm. The problem is that there aren't any new jobs being created for new entrants. And so we've seen a huge spike in the unemployment rate for youth and for recent immigrants, people who are just entering the labor market. There aren't any jobs for them to come to. And then you couple that with there's been a decline in employment in the hospitality industry, which is, if you think about it, it's a major first employer for young Albertans entering the labor market. And so the opportunities for kids in the province have really been drying up.
I think this is one of the most fascinating things, actually. The findings in this report is, like we said in the opening, the tale of two cities, the tale of two labor markets, that partly helps explain, I feel like, some of the dynamics many of us are hearing about and feeling, even among our social circles, which is exactly what you've just described, that the unemployment rate looks kind of high at 7.5% in Alberta, but that has largely not been driven by mass layoffs. There certainly have been some, but mass layoffs. So if you're in a job in those prime working years, there's a reasonable chance that you feel somewhat secure, and and the other people around you probably still have their jobs too. And then you sort of flip that over to anybody who's trying to break their way into the labor market. These sort of like newcomers to Canada, people just exiting school, younger workers, and their unemployment rates are sky high because there are no new jobs being created. And I think that's actually an important distinction, especially as you go through life in Alberta and talk to different people who are having these vastly different experiences of it.
Yeah, maybe I'll add too there. It's not even just kind of your traditional garden variety recession here where it's, a slowing economy, slowing demand. It's employers don't know what's going to happen next. And because employers don't know what's going to happen next, it's really hard to make those planning decisions on staffing, on capital investment. And so kind of the most common response that we've seen, not just in Alberta, but globally, is employers are basically just, okay, let's just pause until we see what the heck's going to happen next year. And unfortunately, what's going to happen next year keeps changing, not even week by week, but day by day, hour by hour, to the point that, this report itself was rewritten. Many sections were rewritten in the process once it was finalized because things were changing as it was written.
Okay, so you said it, not me, so the listeners can't blame me. You said the recession word. What is the likelihood that Alberta's going to go from, what feels like maybe a slowdown today to perhaps dipping into recession? What's the likelihood for Alberta? What's the likelihood for Canada?
Back to this whole question of uncertainty, we're going to go back to the nobody really knows for sure answer. We are absolutely seeing a slowdown in the economy. A lot of banks and forecasting agencies are predicting the Canadian economy at least to slip into recession later on in the year. But again, everything depends so much on tariffs, on what happens in the United States, what happens globally. And it changes so much so quickly that there is easily a scenario where we end up with just a modest slowdown and then a gradual recovery. And there's equally scenarios where we could see the province and the country plunge into recession. It really unfortunately depends on factors that are entirely outside of our control.
And Mike, I know you're a big believer in manufacturing numbers as sort of one of the most important indicators of where the economy's headed, and sort of one of the most important core indicators in our underlying economy. What are the manufacturing numbers telling us about that uncertainty, about what could be coming next?
Yeah, so manufacturing is really it's on the front lines of the tariff wars in a way. They use the inputs and sell the products that typically are tariffed, and so we've seen tariffs on aluminum and steel and other products and on various car parts and Canada trades heavily with the U.S. and we don't just trade with them. We build things together as a country, and so you see these goods going back and forth. And so whether the U.S. imposes tariffs on Canadian goods or impose retaliatory tariffs back, the bottom line is that costs increase. And so the cost of inputs for manufacturers increase, their ability to access markets decreases. and so they bear the brunt of it, generally speaking. Manufacturers do, and so we've seen a pretty substantial decline in manufacturing employment through the first few months of this year. It's recovered a little bit in the last couple of months, which is a heartening story, but we don't know how long that's going to last, and again, because we don't know what's going to happen in the next, by the time we finish recording this podcast, things might change. But it is right now a challenging situation for manufacturers because, as I said, they're the ones who feel the brunt of these tariff impacts.
Great point. We better get the podcast out quickly. It's kind of talking about how the sausage is made, but Alicia, you were absolutely right that like between writing the report and posting it to the website, we had to go back and your team had to rewrite parts of the report because by the time it was posted to the website, they were invalid again. But let's talk about some of the things that move, perhaps a little bit more predictably and that, again, matter to people. If your own job is number one in how you experience the labor market, I think you could argue your house is probably number two. So talk to us about what's the snapshot of what's happening in the Alberta housing market right now.
Yeah, so it's interesting with Alberta housing, as particularly residential construction, is this is actually really a bright spot for our economy where we're continuing to see growth, whereas nationally we're seeing a huge slowdown. And the reason there is just because we've had so much population growth, such an extraordinary amount over the last couple of years. And so what we're seeing is we're still seeing a lot of catch up, right, in terms of just the number of new houses, new homes needed relative to the number of new people that we have in the province. And so, that strength is continuing. We're seeing, just to put that in perspective, basically double the pace of building new homes than what we were seeing before the pandemic. Alberta, I think, accounts for, last I checked, about a quarter of all new homes built nationally, just to kind of put that in perspective, right? So we're seeing a lot of activity. Obviously, Albertans that are driving around, it's very, very visible.
It sure is in my neighborhood.
Everything is in development, under construction, for a good thing, but certainly can be a frustrating thing at times. And so this does continue to be an area of growth. Now, I will say that at a certain point, we'd expect this to sort of level off just because our population growth numbers are really expected to normalize much more so than what we've seen the last couple of years. But right now, that sector is really still playing catch up.
So, yeah, just to underline that, you're saying we're building houses at about twice the rate of our previous record-setting levels, and like 1 in every 4 homes being built in Canada is being built in Alberta right now. It's a surprising and meaningful level of home building.
It's pretty incredible. And when you look at, things like job vacancies or where employers are still hiring, those are the jobs that are still heavily in demand among Alberta employers, are those jobs in construction and the trades that are tied to that industry.
Yeah, I can say for sure that my own backyard is an absolute war zone of construction. They're infilling in behind me, and it's like there's five or six apartment buildings going up all at once right behind my house, and it's a mess back there. But I think further to this point, I think one of the, not to be a wet blanket about this, but
a wet blanket,
right? First time
never.
Ever. So, one of the potential issues to look out for is that we've been in a position we have had this residential construction boom, especially in Alberta and especially in Calgary, and but as the pace of building catches up to the backlog and to population growth, and as population slows, we'll probably start to see that tail off. And so it's a great news story for affordability and for the responsiveness of the industry in Alberta. But we can probably expect within the next year or so at most for that to start tailing off a little bit as our supply starts to catch up to the demand.
Because as you say, housing affordability and housing availability is a function of two things, how many homes there are or how many homes are being built, and then how many people there are that want to live in those homes. And I think every time we've sat around this table for the past several years, one of the headline stories has been Alberta's kind of explosive population growth. And this is perhaps one of the first times we're sitting around this table saying that story is a little different than it has been in the last couple of years. What's happening with that side?
Well, it's still high. It's just slowing down. So, we had population growth that was it was over 4% per year, which is an astronomical number, really. And so right now, obviously this is not being fueled by natural increase. It's being fueled by other Canadians moving to Alberta and immigrants coming into the province. And so the number of Canadians moving to Alberta has been cut in half based on the last numbers that we saw. and the number of new immigrants coming in has been cut by about a third, and then there are still additional restrictions on immigration still yet to come in, and so we're looking at growth, a little bit more than half of what it was before, around 2.5% for this year, and then slowing further after that, and so 2.5% is still a reasonably strong rate of population growth, but it's on the downward slope for sure, and so we're going to start to see it return to more normal levels within the next couple of years.
So put those pieces together for me. If we've got record-setting home building growth and still strong but lower population growth, can the affordability battle be won in Alberta?
Yeah, I mean, if you look at what's happening with home prices, with rent, that growth that we were seeing before has really, really slowed over the last few months and quarters. And so I think we are actually seeing that play out where we're seeing, supply is quote unquote responding to demand, which is exactly what we'd like to see. We're seeing that in Alberta.
Along this theme of how regular folks experience the economy, if your job's number one and your house is number two, you could probably argue number three is, do you have enough money to spend on the things you want to buy? And there's an interesting story with consumer spending, kind of a counterintuitive one, at least to me, that's happening right now.
Yeah, in spite of flat employment growth, as you said, we're seeing some relatively strong consumer spending activity in the province over the last few months, or really in 2025,
and the country too, right?
And the country too, and I think what's happening here, and we'll wait for a few more months to see if the story holds. But the threat of tariffs and the imposition of tariffs has it freaks out a lot of people because the expectation is that the price of all the things you buy is going to increase, and so we've seen strong retail sales growth numbers in the province and across the country, and it's really concentrated. And as an example, it's concentrated in areas where the price increase is expected to hit hardest. And so we're seeing people buying a lot, or people had been buying a lot of new cars or vehicles at all, because there's the stories were a couple of months ago that the cost of a Ford F-150 I think was going to go up by like $8,000 based on tariffs, and that's from several months ago. So I'm sure that's changed 15 times since then, but. So there's been a bit of a stockpiling effect, a bit of hoarding. People expect that prices are going to increase significantly in the near future. They're gonna push those purchases forward and make them as soon as possible before they get hit with that price increase.
I don't need to buy cosmetics for at least another 3 months thanks to my stockpiling.
You got in right ahead of the anticipated cosmetics tariffs. Let's get nerdy economist here for a minute as well on this point of consumer spending, because not only did I notice in your charts that consumer spending is up year over year in Alberta and Canada, I think up 4% in Canada, a little over 7% in Alberta. I mean, those are really strong, kind of year over year growth numbers if you're running a retail operation. But importantly, and this hasn't always been the case, is also the per capita spending is up. Just break that apart a little bit.
Yeah. So per capita, it's basically the difference between total spending and per capita. Per capita is looking at the individual household or person. So looking at kind of me and my household, am I buying less or am I buying more than a year ago? And so what the story that we were seeing for a long time in Alberta is that consumer spending was up overall, but that was simply because there were more of us, right? Individual households like mine, we were kind of trying to hold the line steady in terms of our budgeting. But now we're actually seeing that individual households are spending a little bit more. But again, so much was happening the last quarter. And to what extent was that just kind of a pull forward in spending because individual households are being very strategic and stockpiling whatever they need, where we might see that kind of come down over the next couple of months.
The other interesting thing that's a little bit hard to tease out of the data, but something to look for, as the months pass, is, if you recall a few months ago, there was a strong push towards buying Canadian and buying local goods. And, people were boycotting American products, pulling American liquor off the shelves and encouraging people to buy Canadian products instead. And I think that there's a potential that might have played a small role in contributing to some of this increase, but it'll be interesting to see how long that kind of a trend is sustainable. I think that it's the sort of issue that it seizes people in the moment because they get very passionate about it. But at the end of the day, price usually wins, and so it'll be interesting to see how the consumer sales data looks as we move forward.
That'll be a fascinating sub story and thread to follow, because you're absolutely right. Like speaking as a marketer, classically things like boycotts don't ever really work over the long term, and people usually regress back to what they were doing before eventually. However, there's a line of discussion that this time around, Canada versus the United States, that something more fundamental may be going on, and there's some deeply hurt feelings, or people may get used to the new supplier that they switched to, the French's ketchup rather than the Heinz, and they may not go back afterwards. And I don't know exactly where it'll settle out to.
Yeah, I mean, some of those impacts might stay, but I don't think that they're going to be significant. I mean, I'm curious to see how long those little maple leaves stay on the grocery store shelves.
The French's ketchup is pretty good, though. Okay, so if uncertainty is the name of the game, and we're just an act or two into the movie that is the 2025 Alberta economy, when the next few acts are written and we look back on this year, what kind of a movie will this have been in the Alberta economy? Is it going to be a mystery, a thriller? Are we in for a Disney-style happy ending?
It's going to be, in part, a movie from the Fast and Furious franchise, because you sit there and you watch the main characters do things that are absolutely absurd, that defy the laws of, in that case, physics, in this case, economics, and just it's patent absurdity happening in front of you, and you're just kind of sitting there along for the ride. The only difference is that there are actual real life consequences, but so it's a combination of the Fast and Furious, but with actual collateral damage.
I was going to say it's like one of those really long movies like Lord of the Rings or something like that, where it's so long that you kind of forget the plot along the way. When you get out of the theater, and you've already refilled your popcorn a few times, you get out of the theater and you forget what age am I? What year is it? It's so much has happened. But hopefully, I do hope that there's a happy ending in there. But I do feel that we'll all, by the end of the year, feel just a little bit older and more tired, just because of how much has happened over not just this last year, but kind of in recent years.
That's how I felt after Interstellar.
That's a great movie. Okay, I guess we're going to have to start another show that's movie reviews and movie predictions. No discussion of the Alberta economy would be complete without talking about the energy industry. While Alberta's economy is broad and diverse, energy is still a really important part of it. And given how trade exposed that segment is, perhaps doubly important in terms of this moment in time when we're looking at it. Alicia, tell us, what's the current outlook for the energy industry, and how do you anticipate it shaping our economy and our labor market over the next bit?
The reality of the oil and gas sector is that it is such a reflection of the health and the strength of the global economy. And so I think that the shift that we've seen over the last few months, if we were to kind of rewind and think about what were our concerns a few months ago with oil and gas and with the sector, we were actually worried about tariffs being placed on the sector, right? If you remember, not long ago, tariffs, and really tariffs were only about Mexico and Canada, and it was all around the border, right? And so anxiety, especially in Alberta, there was evidence that was very high among oil and gas workers, worried about their jobs, worried about the future of the industry. And what's kind of interesting is that two big things have happened since then. One is that, President Trump came out and exempt tariffs on Canadian goods that are customs compliant. So, we don't have to worry about tariffs. That's good. But then the other big thing that happened was this, retaliatory tariffs, not just Canada and Mexico, but all of a sudden it was, Liberation Day, right? And all of a sudden, it's not so much about Canada and Mexico, it's about every single country, and the U.S. is placing tariffs kind of across the board. And what was interesting to me is our first reaction of not seeing ourselves on that list was a sigh of relief. And then we saw oil prices drop quite significantly, just in a matter of a couple hours and the next couple of days, where all of a sudden I think we collectively realized how important the strength of the global economy is to oil and gas and to Alberta, almost to the extent that really matters more than any individual tariffs themselves on the industry. And so I think that's kind of really what's top of mind for the industry right now, is just the strength of the global economy and what's going to happen next. And when are we going to be on kind of more stable footing where, we can expect consumer demand, businesses can make investment decisions, these kind of longer term, bigger picture things.
What an interesting point, right? That just in the last few weeks has really changed. The thing keeping energy CEOs up at night is not so much tariffs as we maybe expected it to be. It's actually what's going to happen with the global economy and therefore global demand. Tariffs is actually the smaller of those two stories.
Exactly.
The oil and gas industry and energy prices don't just impact our economy, they impact our provincial budgets as well in sometimes complex and difficult to sort of instantly appreciate ways, especially because there's this dynamic between the oil price, the WTI price, and the oil differential. Mike, would you just break that apart for the sake of our listeners? The numbers have actually changed a lot in recent years in terms of like what $1 change means. So update my thinking.
Yeah, they have changed a lot, and so I guess the bottom line is that oil and gas revenues, royalties make up a huge portion of the provincial government's budget, and the amount that it varies from in bad years 15-20% to like over a third in good years when oil prices are high, and that number, that the amount of money that the province gets for every dollar that oil prices rise or decrease has been growing as well because of different energy projects hitting payout, and so that means that after they recover their costs, they graduate into a higher threshold or a higher tier of royalties, which means more money for the provincial government. And so right now we're in a situation where the province estimated that it budgeted for oil being in $68 a barrel. That's the West Texas Intermediate price, and estimated that for every dollar that they missed that target would cost or benefit the province by about $750 million.
Either up or down if it's above or below. Got it. So $750 million for every dollar up or down.
Yeah, which makes it really hard to budget if you're a finance minister in Alberta, because nobody really knows where oil prices are going to go. Just because of, you can follow trends, but geopolitics and events can have a huge impact on oil prices, and we're literally seeing that right now. And so you asked about two things: the WTI price and the differential. And so the differential is the gap between that benchmark price, that West Texas Intermediate price, and the price that Canadian and Alberta producers actually get for the oil that they sell. And the reason why there's a gap, one of the major reasons, is first of all the quality of crude is lower than West Texas Intermediate, and the second reason is that we have we're a bit of a captive seller, because the vast majority of our oil goes to the United States, and so those two factors drive a gap between the West Texas Intermediate price and the price that the companies actually get,
which we typically benchmark to WCS or Western Canada Select, right?
And so the gap between those two things also affects how much money the provincial government gets, and it's almost the same amount. It's about $740 million. So if the gap narrows, that's a good thing, which means the province is getting more money. But if the West Texas Intermediate, the benchmark price, falls, then it means they're getting less. And so right now, up until about a week ago, we were in a position where oil prices were well below the $68. They were hovering around 60, 61 for a little while. But at the same time, the differential was narrower, in large part because the TMX pipeline coming online, helping to narrow that gap a bit. And so that the narrowing differential managed to cut about half of the impact of the falling oil prices. But right now we're in a position where, because of what's going on in the Middle East, oil prices are suddenly jumping back up again. Today they're sitting at around $74 a barrel. So we're suddenly looking at the opposite end of that. But 1 week is not going to undo a month or so of weakness or concern for the provincial government. So how this all plays out in the end, it's far too early to say right now.
Perfect. I think that's good to appreciate, because I remember in years past, we would think of that like $1 change, neither price or differential. I remember times when we were talking about that being worth $200 million or $250 million. And so now to appreciate that every dollar change is in the $750 million territory, that's enormous. And one of the other things that I think is interesting about that is if you do the back of the napkin math on, $1 of extra oil price times the amount that Alberta produces per year, a little more than 4 million barrels a day, that's about $1.5 billion, per every $1. And so that says that about half of that incremental difference is flowing to the Alberta budget as of these projects being at payout, which I think is just an interesting way to sort of appreciate the importance of every one of those dollars to both the Alberta economy and the Alberta budget. As we begin to sort of wrap in around the end of this, I want to ask you that sort of give the zoomed out picture. After diving into this data over the past weeks and frankly months, what are your big takeaways? What do all these factors tell you about what's shaping our economy? And what's the snapshot?
Well, as Lish said earlier, it's not even so much the tariffs anymore as it is the global uncertainty that's shaping everything. And so, we don't know what's coming next. We haven't even seen the impact of the things that have happened yet. This is so we talked about Liberation Day. But that got walked back pretty quickly. But in the
what many people in the States have told us they call Capitulation Day.
Taco. The impact of things like there's been a significant decline in Chinese shipping container shipments coming into the U.S., but that hasn't really found its way onto store shelves yet. And so we still haven't seen the impact of like 3 or 4 steps ago. So it's difficult to say what's going to happen next. Really, it depends heavily on what's happening in the U.S., what Donald Trump decides to do next, and in a sense we're kind of just along for the ride.
That's a great way to put it. Is I think what I've learned over the last few months is just the importance of uncertainty, how much of a drag it is on the global economy, and the importance of the U.S. market and economy just as such a weight that can be thrown around for better or for worse. I will say, in terms of a bit of a silver lining, I think one of the big takeaways for me, just with all of this shifting, a lot of the, this is not a world where tariffs were imposed and then, that was that. This is a world of tariffs are imposed, they're on pause, they're being refined. And in those little decisions and changes, I think we've seen where there is weakness. I think one of the concerns with the U.S. has been there's no checks or balance on President Trump. Congress really isn't doing anything to stop it. But there have been realities where I think the markets and consumers and voters, there are some real concerns there in terms of, for instance, why was oil and gas not tariffed? I think that really shows the weakness and the reality of President Trump. And even though he seemingly cares so much about this protectionist agenda, there are going to be real consequences. And I think some of that, to Mike's point, haven't fully played out. And the more that we see those play out, I think the bigger the likelihood that some of these policies will be kind of walked back to the point where we almost forget what was initially imposed. Or we have to look back at the timelines.
I'm going to go way off board and offer a second silver lining.
Wow, Mike with the silver lining.
Two silver linings.
First time ever. And that's this chaos has alerted the country and alerted political leaders, federally and provincially, to our own underlying weaknesses and the need to get our own house in order. So, we've seen this huge interest in removing interprovincial trade barriers across Canada, trying to make sure that we can operate with one functional economy, remove limitations on goods exports, on transportation rules, on mobility of labor, people being able to work and have their credentials recognized in other provinces. We've talked about those problems for years, and there's actually been some progress made on it, basically for the first time in ages. Mm-hmm. Whether they go all the way, I think that's a different question, because you're going to run into some political realities on that front pretty soon. But they're making good progress, much better than ever before. And then on top of that, we've got Prime Minister Carney coming in with his Bill C5 and this huge focus on building new projects, getting things done.
A serious focus on it. Yeah.
Working on overriding some of the very long approval processes and just getting things done. And so that focus on building, that focus on getting Canada's own house in order, it's still early days. We don't know what the impact of those things is going to be, but there is at least a small component of this is Canada kind of waking up out of its own slumber and realizing that it really needs to get its act together in some of these areas.
I agree with you on your rare offering of a second silver lining.
Don't look for another one.
Don't look for another one. But I think you're absolutely right. The wake up call of this has been a silver lining. For years, economists and you two in particular have been saying things that GDP per capita is declining or underperforming. Our Consumer spending is on a per capita basis is declining. Our productivity doesn't look very good. And many times I've sat across the table, maybe I've been the one saying sort of, shut up, economists. The overall economy is going up. The overall amount of consumer spending is going up. No big deal. And you've been screaming into the void. No, that's papering over the underlying problems.
We were right.
But you were right. And so what a great place to leave it. An interesting period in Alberta's future. Uncertainty truly being the name of the game with some underlying strengths, but also many, many areas where it's a bit of a tale of two cities playing out. Thanks, Mike, and thanks, Lish.
No problem.
Thanks. This is fun.
That's a wrap, but the conversation doesn't stop here. If today's ideas inspired you, share the episode and help us keep the momentum going. You can also support the show by rating and reviewing us wherever you get your podcasts. Thanks for tuning in to The Brief.